Welcome to another edition of Regulatory Ramblings Briefs. Our guest today is a bit of a repeat customer in that he's already been on our main podcast last year, Regulatory Ramblings, early in that show's history. Oriol Caudevilla, he's a highly regarded voice in all things crypto and fintech, being a fellow at eHKD's Asian Institute of International Financial Law. He also works as a board director and co-leader of the Financial Inclusion and CBDC's working groups at the Global Impact Fintech Forum, and is a chairman of the private Digital Euro working group at the Digital Euro Association. I won't belabor you with his background. He's an esteemed speaker and writer and expert on the subject, and he's highly regarded. His work is often read and cited. He has published multiple articles and been cited by institutional media outlets such as Reuters, Forbes, Middle East, South China Morning Post here in Hong Kong, Outlook India, China Daily, Asian Investor, Forecast News, and Cointelegraph. In addition, for the past year, he's hosted the Digital Tomorrow podcast, which I encourage all our viewers to try to listen into. Oriol is a well-known speaker. He was named the Asian Fintech Speaker of the Year for 2021 by Faster Community and has participated in over 150 conferences since 2020 talking about CBDCs and the use of blockchain in Islamic banking and finance. He's going to be talking to us today about Hong Kong's adoption of a eHKD dollar, which is taken on new significance since the government's announcement of a pilot scheme involving 6 banks and payment providers in May, as well as an earlier piece he wrote with Henry Kim. The article he wrote for China Daily in late May, SAR steps up its readiness for possible electronic Hong Kong dollar, and the research paper, the Digital Yuan and cross-border payments that he wrote with Henry Kim. And your piece in late May, where you talk about the HKMA's FinTech 2025 strategy and that it's a big step forward, and that the initiative aims to encourage the financial sector to adopt technology comprehensively by that date, and to promote fair and efficient financial services for the benefit of Hong Kong residents and the economy. I mean, it got a fair amount of notice. And I want to quote two passages. You said that FinTech 2025 seems consistent with Hong Kong's current role as a global fintech and trading hub. Indeed, Hong Kong's future is not so much about remaining as the gateway to the Chinese mainland, but mostly about keeping and enhancing its current status as one of the world's most important financial centers by adopting the very economic initiatives that are relevant to the development blueprint of the Guangdong, Hong Kong, Macau, Greater Bay Area. In that sense, FinTech 2025 is aligned with the mainland's 14th five-year plan between 2021 and 2025, and the national economic and social development and long-range objectives through the year 2025, which recognize Hong Kong's economic potential at the national level. Do you still feel that way, or I mean, has your perspective changed, or anything you'd like to add to that?
No, I still do feel that way. I think I started to talk about this FinTech 2025 strategy when it was unveiled in around 2 years ago in July 2021. And I have been writing about that since then, and I still do feel the same way. I think it's pretty much what you said. No, I mean, the idea is that Hong Kong is in a perfect position to leverage its uniqueness to help not just Hong Kong itself, but mainland China as well. And I think that we saw an interesting change, to put it this way. I think I would say it was like a change in October, November, where Hong Kong started to more actively promote or leverage the potential of areas like Web3, green tech. I'm not saying by that before October, November, Hong Kong wasn't, into these areas, but I think that there's been an increase when it comes to the interest towards this, towards not just fintech in general, but also Web3, etc.
But here we have to worry about. I mean, I kind of think about the holdouts in that. Okay, the government's delineated its pilot scheme. 16 banks and payment companies will participate. I don't know. Do you? Yet this is a society where I don't know what the proportion is, but even if it's a minority, it's a sizable minority that came of age in an earlier age, and they like to do their banking face to face. They like to pay in cash, and it's all well and good to say young people will be receptive, and over time, today's young people will become the majority of tomorrow. But between now and then, there's going to be a significant amount of people that are holdouts that still prefer to use cash, right? Is it just a waiting game, or is it conceivable that older generations can buy into the notion of an e-Hong Kong dollar and e-payments?
Well, I think that's a very interesting question that mixes like many different topics. First of all, I think that one of the things that may catch the eye of someone like first arriving in Hong Kong could be precisely what you mentioned. It could be like the still large amount of people using cash compared to other places. Right. I mean, for example, in Europe, people generally speaking, I would say they use electronic payments more than in Hong Kong, or at least less cash.
For sure.
And in mainland China, that's even like a much more like pronounced difference. I mean, cash is, I'm not going to say non-existent, but well, I mean, in some cases and in bigger cities, it's like something like an oddity, to see people using cash. So in that sense, well, Hong Kong has some peculiarities, and I would say that people shouldn't be afraid in the sense that the electronic Hong Kong dollar is going to be, if or when eventually deployed, a CBDC, etc. But CBDCs are not here to replace cash. I mean, I know that when central banks started to work on CBDCs, many people said, especially during the pandemic, that the main goal was to replace cash and this and that. But I think that CBDCs are not designed for that. I mean, of course, this can be a consequence of CBDCs in the future. But I would say that the main goal of most CBDCs, and this would apply for the electronic Hong Kong dollar, would be the idea of, making payments more efficient, faster, seamless, more transparent, etc., to promote financial inclusion as well. I wouldn't say that the main goal is to, make, for example, these elder people who only use cash use the electronic Hong Kong dollar instead of cash. I mean, this can be a consequence because of the penetration of the electronic Hong Kong dollar, or simply because of time going by. But I wouldn't say that's the main goal. I think that, and overall, it's very interesting to see Hong Kong digging deeper into the electronic Hong Kong dollar project. The latest developments, for example, were the ones that you mentioned. When in mid-May, you from the Hong Kong Monetary Authority, the CEO of the eHKD, which is Hong Kong's de facto central bank, announced the starting of this pilot program involving 16 banks to test the electronic Hong Kong dollar for its use in restaurants, money transfers, shops. So I think it was an interesting step forward. And I think that Hong Kong, in this sense, is not acting blindly, because Hong Kong has a very, and when I say Hong Kong, I should maybe more specifically say the Hong Kong Monetary Authority, has a very interesting and relevant experience in CBDCs. It's actually, I would say, one of the few central banks in the world which has been involved in more than one CBDC project. I mean, in Hong Kong, for example, the Digital Yuan for cross-border payments was tested a while ago. Then Hong Kong, or the HKMA, has been working as well on the M-Bridge project, which is a wholesale CBDC project involving the central banks, not just of Hong Kong, but also of mainland China, United Arab Emirates, and Thailand. So talking about CBDCs is not something new for Hong Kong. And I think Hong Kong can learn from its past experience in CBDCs to make this electronic Hong Kong dollar successful. I mean, of course, I cannot see the future, I don't know what will happen, but I think the right elements are there to see a successfully implemented eHKD.
Oh, for sure. I mean, and when the when the initiative was rolled out, and you go on to point out in your piece that it's one of the three rails that the government's trying to push, the utility, the ease, the simplicity of use, the way it would make life easier. It does have a draw factor for those that are already somewhat tech savvy, using tech in their daily lives. They're open to it. Yeah, I can see the utility, but again, this is a heavily cash based society still. You close your article, and I just want to quote this before we start talking about the digital yuan. You close your article by talking about how, depending on how far Hong Kong comes, it may even be able to aid the mainland and prove its worth. You say, Hong Kong will not walk alone in this area, since the fintech scene on the mainland is developing very fast too. Mm-hmm. In this sense, Hong Kong and Macau, to a lesser but very relevant extent, can undoubtedly play a vital role in China's fintech scene, given Hong Kong's current position as one of the most important financial centers in the world, and given that the fintech industry here has the potential to develop much faster now that it can leverage its involvement in the Greater Bay Area. To sum up, not only is Hong Kong in a perfect position to leverage digital yuan future deployment to enhance its status as one of the world's most important financial centers, it is also in a perfect position to explore the possibility of an eHKD, as well as showing once and again that the HKMA and therefore Hong Kong are at the forefront of the CBDC race. Hong Kong has been for decades one of the most important financial centers and will remain so, but it is wise to keep improving and embracing technologies to keep its leading position and never be left behind. And that's a position Hong Kong took for granted, that if you look back to the late 90s, early 2000s, Hong Kong could be proud of itself because, Westerners would hear about us paying for things with an octopus card. And, certain people in North America, they were like, oh, we wish we'd have something like that here. Mm-hmm. And then that gradually started to get rolled out there. Just touch and swipe. Not the original, magnetic stripes that you had to run through something to be read. Mm-hmm. And we were complacent for a while, and then other jurisdictions caught up. You're making it sound as though, it's not the death knell for Hong Kong. Hong Kong can still catch up. Hong Kong can still, thrive, excel. But that, reading in between the lines, its future in this space is directly tied to developments in the mainland. You speak of, again, leveraging its involvement in the Greater Bay Area. Could you flesh that out, please?
I think that first of all, what you mentioned before about the octopus card and everything, I think it makes sense. I would say that before digging deep on what you said now, I think that Hong Kong is a land to some extent of contrasts, in the sense that you can use, for example, this great octopus card to pay pretty much for everything, which is something that many jurisdictions do not have. And when it comes to banking, for example, you see many banks doing amazing things, but then certain processes are still very paper-based. No, I experienced that myself when it comes to banking in Hong Kong. You can
AML, KYC.
Yeah, but not only that. Sometimes, even the processes, I don't know, paying the bills or everything, sometimes I know you can apply for autopays, but sometimes you still need to do many things manually. This kind of idea of a very old style of banking combined sometimes with the state-of-the-art technology. So I know sometimes there are contrasts, but overall Hong Kong is, as I said before, in a good position to show to the world its tech prowess and finance prowess, even much more. And I think that one of the key areas is precisely what you are asking me about right now. Hong Kong's involvement in the GBA, in the Greater Bay Area, etc. So I think, and this is obvious, this is not 1997, no, things have changed. And I'm not talking about politics, I'm talking about the world in general, I'm talking about finance. So when it comes to Hong Kong specifically, I think that Hong Kong's role is very different, or will be very different from that from before. Of course, Hong Kong to some extent still remains a gateway to China, and Hong Kong benefits from being part of China and being next to China. That's for sure. But at the same time, I would say that, Hong Kong's role has changed and will have to change more now, because Hong Kong now is part as well of this greater Bay Area blueprint, now involving many cities, and Hong Kong brings something very different to the table compared to the other cities. I mean, Shenzhen, for example, we all know that brings its tech prowess. Now, I mean, many tech companies are based in Shenzhen. They are doing amazing stuff when it comes to tech, and they have many startups, many unicorns. Many startups have become unicorns, etc. So Hong Kong is more on the finance side, but it doesn't mean that Hong Kong cannot bring much to the table. No, Hong Kong has much to bring to the table, because precisely Hong Kong has been one of the most important world financial centers for decades. So I think that I would say that as a quick summary to all of this, yes, Hong Kong has still a very important role to play in the future by leveraging what Hong Kong is and has been for decades, but also by adapting to the present and future times, which is what Hong Kong is trying to do right now, precisely when we are all hearing and reading about Hong Kong, tapping into green tech, Web3, this and that. So I'm not saying that all these initiatives will work out. I mean, of course, perhaps some of these initiatives will, in the end, prove that they are not that satisfactory. We don't know that for sure, but I think the right ideas are there.
Oh, so I mean, to your point about I wonder how many of these things are going to work out. I mean, what else is the development of technology other than conceiving of things that don't exist and building them, and hopefully some will be profit leaders, some won't. Certain technologies won't be adopted. I guess that's the natural order of things. But to your point about the innovation going across the border in mainland China, that it has led some people to say, okay, fine. What do we need Hong Kong for? That if that brain power exists in mainland China, they're hungry, they're driven, they're achieving a lot of great things. When was the last time anything innovative came out of Hong Kong? What do we need Hong Kong for other than for finance capital?
Well, I think that's like
that's a cynical perspective, but it's out there.
No, I know it's out there. I heard that many times as well, but I would say that's like oversimplifying things. That's what I would say to these to people who say that. I mean, of course, it's true that if you just look at how many unicorns are created, for example, Shenzhen has had many more unicorns than Hong Kong these last few years. But it doesn't mean that there is no innovation in Hong Kong, because Hong Kong has also had, innovations being created there and unicorns, etc. So I think everything needs to be put into perspective. You cannot be number one in everything you do. But I would say the good thing about Hong Kong is that Hong Kong is number one in finance, it's number one in many things. And then when it comes to tech, despite perhaps not being like Shenzhen, it doesn't mean that Hong Kong is a zero. Hong Kong is doing many great things. Hong Kong's fintech scene is thriving. We all, for example, saw all those virtual banks being created in Hong Kong, like between 2020 and 2021. Of course, we don't know how many in the end will survive, what will happen. That always needs to be seen when we're talking about new tech companies, but still, those 8 were created, they are still there. So we are seeing many new developments. So I think that China needs Hong Kong, I would say, for the same reason that China has been in Hong Kong for the past decades, because Hong Kong has differences. We all know that. The one country, two systems principle is in place now. So Hong Kong has this openness when it comes to its financial system, legal system, that the mainland has or doesn't have to this extent, and that's always beneficial. And then if you just focus, as you said, on the tech side, on the brain side, yes, of course, China has nothing to envy to anyone, but at the same time, I would say that it's not like Hong Kong is not doing anything, but we should put into perspective that Hong Kong only has 7 million or less than 7.5 million inhabitants. So you cannot expect Hong Kong, to produce more unicorns that China and the US combined. Now you need to put everything into its right perspective. But overall, I would say that Hong Kong has still much to offer in all these areas.
Okay, fair enough. Detractors would point to the example of Singapore, but again, it's undergirded by a very different philosophical regulatory apparatus, which is more top-down, state-driven versus market-driven. When I don't think Hong Kongers would care for that kind of system here. I'd next like to turn to the concept of the digital yuan, its relevance for Hong Kong, and particularly your paper that you co-authored with Henry Kim entitled "The Digital Yuan and Cross-Border Payments." In it, you say the race to global adoption is on by offering a case study of China's e-yuan and the first mover advantage. And you delve into the Chinese government's approach to research, development, and the rollout of the digital yuan, and you assess the mainland's digital currency electronic payment system in terms of its joint venture with SWIFT, its regional comprehensive economic partnership, the Belt and Road Initiative, as well as in the context of the Communist Party of China's political economic growth goals, as well as the drivers of technology, the People's Bank of China, which is the real power in banking in Chinese regulation, in case anyone's wondering, as well as careful testing of use cases of the potential impact on Western organizations conducting business with and within China. What, for those of us that the digital yuan is something we hear about in the news, it's in the background, it's always there, it's in vogue, but for many people it's just a lot of white noise. Why does the digital yuan matter to us? If we're, I mean, it matters to us because we're part of China, and or to those in the APAC region. But why should the digital yuan matter to people in elsewhere in the world, OECD countries where the dollar is still king?
Well, I would say it matters, and it matters a lot. I mean, this is a topic about which we could talk for hours, digital yuan, and I would encourage everyone to read this article, which was commissioned by the Blockchain Research Institute from Canada last year, and it has actually recently been republished more as an academic article by the Hong Kong University Research Journal Papers at the Faculty of Law. But I mean, the idea is digital yuan is China's central bank digital currency. Therefore, it is issued by the Central Bank of China. And well, I could talk a lot about central bank digital currencies, but focusing just on your question, I would say that digital yuan matters. It matters for China, of course, because it will allow China to do certain things. Perhaps the idea is that it would allow China to make the whole payment system more efficient, etc., and also to promote cross-border payments using digital yuan, which is the key idea of my paper, actually. And then I would also say that it's mattered a lot to other countries, because I'm not saying that CBDCs started, because of digital yuan or anything like that. But I think that many countries sped up, the testing of their CBDCs in Asia and also in the rest of the world, because they saw China so advanced. And you can clearly see that this worried the US as well, because the US initially didn't want to start working on the digital US dollar, because, I mean, when your currency has the penetration that the US dollar has, you may think it is not necessary to change anything, but then, well, they realized they need to work on a CBDC because China was actually growing very fast. So I think it's had a bit of an earthquake effect, on the whole financial world, and even in politics, seeing China so advanced with its CBDC.
In terms of the global adoption of the digital yuan, it makes sense that the immediate parties, the immediate takers, will be those that China has the greatest amount of trade with. If they're trying to save on exchange losses in exchange rates, constantly having to convert funds, then it makes sense. If you're one of China's debtor nations on the Belt and Road Initiative, it makes sense. But increasingly, I mean, even in their dealings with Russia, you're seeing China, those that deal with China want to deal in hard currency. They prefer to, I mean, there was talk of greater yuan trade in yuan with Saudi Arabia for oil. That would have cut China's oil bill a great deal. But even the Saudis want to be paid in dollars. Might this not come back to a simple truism that adoption of any currency, whether in a physical or digital form, comes down to underlying faith in the currency? And right now, the world just doesn't have that much faith in the yuan.
Mm-hmm.
But you can't
Yes.
ignore it, obviously, because of the size of the Chinese economy. So.
No, I think that's a very good remark. Well, I mean, I think same as before when we were talking about Hong Kong, everything needs to be put into perspective. You know, I also wrote an article about, for the South China Morning Post in May, talking about these de-dollarization trends and how the digital yuan can be part of these trends or not. I mean, the idea is that we are seeing de-dollarization trends, you know, and by de-dollarization, I mean, you know, countries who are ceasing or stopping, you know, to use the dollar to settling international trade transactions, etc. So these trends exist. Now, to what extent these trends will become like, will continue and will become more clear, that needs to be seen. But I mean, if we look like sometimes at statements made by politicians, at what's happening, what's going out there, we can see that the dollar will probably, its use will go down, and the use of other currencies like the RMB will go up. As I said before, to what extent it needs to be seen. I mean, I'm not saying that this is a process that will happen overnight. It's a process that it's happening. But as I said, if we look into this like from afar, we see that 60% of the global foreign exchange reserves are still in US dollars, 20% is for the euro, and just 2.7% is in yuan. No? So, I mean, we see that the yuan still has like a long way to go before challenging like the US dollar or anything like that. But still, we are seeing these trends. I mean, we saw, for example, in Davos, in the Davos Forum in January, the finance minister of Saudi Arabia saying that they would consider using currencies other than the US dollar for settling their trade transactions, especially the oil-related ones. We saw, for example, Brazil's president, Lula da Silva, mentioning in April in Beijing that they would start using other currencies aside from the US dollar. So we are seeing these trends, and these trends are actual, they are real. So, I mean, they exist, yes. But these trends, first of all, don't necessarily need to involve the digital yuan. What they involve is either the dollar or the yuan in general. Now, what I try to describe in my paper is how the digital yuan, how China's CBDCs can, you know, like help China, or how China is trying to use them for making cross-border payments in yuan more common, to put it this way. No, and what I said there is that it is true that there are like some factors hindering the internationalization of the physical RMB, capital and foreign exchange controls, etc. So even though it is true that the same factors hindering the internationalization of the RMB nowadays will still apply to China's CBDC, the digital yuan, it is also true that in the same way that the physical RMB has specific cross-border applications, the digital yuan will also have specific cross-border applications that will allow it, you know, to help China to make the yuan much more used in international trade, thanks to the digital yuan. Now, how? Well, in my paper, I try to explain this in a more detailed way. But for example, and you mentioned this briefly, the Belt and Road Initiative. We're talking about countries which have like large amounts of trade with China. So this could be a perfect platform for China to try to internationalize the digital yuan using internationalize the yuan using the digital yuan. Then, aside from the Belt and Road Initiative countries, there is also the RCEP free trade agreement area. As you know, RCEP is a huge free trade agreement which was signed 2 years ago, and which encompasses like more than the world's 30% of population and GDP. So it might be a platform for China as well to try to internationalize its CBDC, the digital yuan, in the same way, of course, that other countries could try to internationalize their own CBDCs in RCEP. You know, I'm not saying that China will be the only one, but China for sure has this platform, this outlet. And then there are like other potential use cases, like, for example, Africa. No, China has many investments in Africa. So China, I think, will for sure try to internationalize the yuan using the digital yuan. But as I said before, these de-dollarization trends are still like they are a trend, but they are still in a very early stage. But the trust, the confidence in the US dollar has declined, that's for sure. I think it started to decline in 2007-8 when the global financial crisis happened, and then these last few years, well, this decline in the trust to the US dollar has becoming more clear. No, this year, for example, as well, China said that according to them, the US dollar was a source of instability because we all know what's been happening in the US with the Fed and the interest rates. So many more countries are trying to look for alternatives. How that will pan out in the end, well, it needs to be seen. No? I'm not saying by that, that digital yuan will make the yuan become, much more used than the dollar or this and that. No, I mean, I'm not saying that won't happen overnight if it ever happens. But we are in the midst of these trends, which are very, very, current trends, and I think it's interesting to know about them and to keep track on them.
That's a fair point. One certainly we could discuss for a long time, certainly ad nauseum. Before we let you go, is there anything you feel we didn't cover? Anything you'd like to say that you feel is important for viewers and our students to retain on the matter, on this topic?
Maybe if I had to make one final remark, I would say that it's very important, and I know I keep saying this all the time like a broken record, but it's very important not to confuse CBDCs with cryptocurrencies, with Web3. And I say that because CBDCs like Digital Yuan are not a cryptocurrency, and this is why it's perfectly consistent to have a country like China, for example, which adopted a tough stance towards cryptocurrencies, but which at the same time is, promoting its own CBDC. That's possible because a CBDC is not a cryptocurrency. Therefore, there is no contradiction in what China is doing. I know that, of course, crypto traders would prefer, China to allow cryptos, but that's something that they would prefer. But when it comes to the concept per se, there is no contradiction in China being tough towards cryptos and then promoting their own CBDC in the same way that one jurisdiction may decide to, go for both CBDCs and cryptos, or, so there is this idea, of not CBDCs and cryptos not being the same that I try to highlight and remark all the time, because I think it's the key to this topic.
We'll leave it there. Folks, please do try to read Oriol's articles. We will include links to them on our website. The first one came out on March 25th from China Daily. It's entitled SAR Steps Up Its Readiness for Possible Electronic Hong Kong Dollar. And the research paper written for the Blockchain Association by Oriol and his co-author Henry Kim is entitled The Digital Yuan and Cross-Border Payments. That came out August 17th of last year. So thank you again for joining us. Until next time.
Thank you.